What we'll do today is that the current administration, which is the Modi government, is about to reach the 4-year mark. 4-year mark. The whole mantra of the current administration is that achhe din. But from a stock market standpoint, where has been the needle moving move? Which stocks have had achhe din and which stocks have had bure din? So let's discuss all that and much more with Ajay. He's standing with some lovely graphics who want to capture the 4-year of the current administration.
We may debate whether what kind of work has been done during the first 4 years or not. I don't know about traders, but the 4 years, in fact a little before that, we've calculated these returns of almost 43% on the Sensex, 40% on the Nifty. That is the kind of return benchmark indices have given during the first 4 years of Modi government. In fact, I even saw that the rally in the Indian markets actually started happening from September 2013, which is pre-swearing in of Mr. Modi. When BJP was named Mr. Modi as the prime ministerial candidate of theirs, the big rally started there. So if you add that, then even 5-7% higher than 40-43% on the benchmark has already been made in this 4 years, which is not bad for a portfolio investor. And this is the case for large caps or mega caps. If you look deeper, you would see that the mid cap index has actually given almost 80%, small cap also almost the same kind of returns have come in. Let's talk about the names which have done well, and it's very surprising. We may talk about PSUs. PSU has not actually fared on some of the best gainers. It's the consumption stocks. Bajaj Finance and Bajaj Finserv, these two are consumption kind of plays, consumer retail lending. And look at the 10x Bajaj Finance has gone up in this time. 7x Bajaj Finserv have gone up in these 4 years. Surely other stocks like HUL, Titan has also gone up, but they are much larger companies. Still 3x in the 4-year time period is very impressive. Asian Paints 2.5x. The only one PSU figures in that multi-bagger list in these 4 years is HPCL, which is undergoing a rough weather right now, but still is almost 3.5 times in these 4 years. Broader market names are very interesting. NBCC is one of the big multi-baggers in this 4-year period. The stock is up 5x in this 4-year period. Other names are Edelweiss, again a consumer lender, MSME lender and a broking company. Future Consumer 7x. IB Ventures actually started moving in last 1.5-2 years, but that's also a big mover, along with Sterlite Tech, which is actually seen as one of the plays of Modi government initiative or digitization, Digital India, connecting villages with the network. So that is also one of the stocks. Look at the banking names. It is important because BankX is seen as one of the proxies of the economy. Private sector banks actually figure in that list. IndusInd Bank, Yes Bank, Kotak Bank in these 4 years have gone up 3x. RBL is also one of the big multi-baggers. Apart from the fact that HDFC, our favorite, this is one stock which doubles every 4 years. That is also one of the list. So that's the kind of wealth stock market has actually made for investors in these 4 years of Modi government.
Thanks, Ajay. Thanks very much for pretty much joining the dots when it comes to connecting politics and its impact on the markets. In the 4-year report card for the Modi government, we're also going to be assessing the performance of the economy in macros and the macro trends that we've seen over the last 4 years. Poonam joins us with those analyses. Poonam?
Well, thanks so much for that. In fact, Tanveer, if you look at the entire macro picture, right from when Mr. Modi did come into power, we're seeing that yes, there has been significant amount of improvement in some of the macro picture, but most of the key macro indicators have also improved on account of lower crude prices. Look at the CPI. When Modi took over, it was at 8.3%, but now it is down to 4.6%. Of course, we are seeing lower inflationary expectations on account of lower crude prices. GDP also was pretty much at around 6.4% around May 2014 or FY14, but now it is at 6.6%. So we did see some amount of impact in terms of the GDP, especially on account of the note ban as well as the GST, but now GDP is surely stabilizing. There has been considerable improvement in terms of the fiscal deficit. If you look at the overall fiscal deficit, right from 4.5% in FY14. We're down now to 3.5%, but again the risk in terms of crude and overall collections or revenues is there, and hence there is a case of concern that will we really go ahead and meet the 3.3% target for FY19. Again, in terms of current account deficit, while we did see good amount of improvement in current account deficit already until FY14, because if you look at current account deficit, it stood at 4.3% in FY12, it was down to 1.7% in FY14. We did improve to nearly around 0.7% in last year, but again, because of the higher crude prices and also because of the overall global trade concerns, we are seeing the current account deficit also rising going ahead. Forex reserves have seen considerable amount of improvement, with forex reserves recently hitting record high at around $420 billion. But having said that, there has been some amount of intervention also from RBI in order to arrest the rupee fall, and hence that also needs to be watched out for. On the rupee front also, we have seen a good amount of weakness in terms of the rupee pretty much in the recent few months, and we're also seeing that although RBI has gone ahead and cut the interest rates right from around 2015, we're seeing that the bond yield again has risen considerably in the recent months. Again, the risk of that the fact that the interest rate cycle cut cycle has now ended is a key factor. So overall, yes, I guess crude will be the crucial factor, both in terms of growth as well as fiscal deficit, current account deficit, and to an extent rupee.